get some insights here from Jens Nordvig. He's Exante Data founder and CEO, joining us right now. Let's start there, Jens. Everyone's talking about dollar weakness, the idea that it is going to persist into 2021. Is there any sense here that maybe all those people are right?
So the first thing I would say is that it's sort of common that you do year ahead outlooks and then you sort of have to come up with a narrative, and then a couple of weeks into the new year, all those narratives fall apart. But this cycle is a bit different, right? We've had some huge macro moves in 2020, and going into 2021, we're also going to be seeing some big macro moves. So it's not going to be little wiggles. So I think there's a better chance that a big move in the dollar is really potentially ahead of us. And it doesn't matter so much that a number of people are writing about it at the same time, because it's a big move. It's not like a little wiggle. And I would also say that when we look at positioning, and we have a lot of proprietary data we look at for positioning, it matters a lot of what you look at. So you made a reference to what's going on in the futures market, and clearly there's a very significant amount of dollar shorts in the futures market. But if you look at the real money community, if you look at the positions there, the real money community was really long dollars aggressively early in the year, and they've been getting back to neutral. But I don't think it's the case that there's like a huge dollar short in the big real money community. And those are the investors that can add to dollar short positions in coming months, coming quarters, and help sustain the dollar weakening trend.
I want to talk about the sort of economics behind this. A lot of people have said, of course, and we heard it a little bit from Trump in the last 4 years, dollar weakness, it lowers the value of the goods so that you can export them, and other countries find it cheaper to buy here. So that could be a good thing. But then, of course, other economists say, like Janet Yellen, the incoming Treasury Secretary, you want a strong currency, a sign of strength. Where are you then on the economics of what it means to have dollar weakness versus dollar strength?
I think from a trade perspective, it's pretty clear that having a more competitive dollar would be helpful over time. But the U.S. is not a country that is sort of competing on cost in a lot of sectors. Just because we have a somewhat weaker dollar doesn't mean that we can suddenly start to compete in textiles and all those types of things. So the dollar really needs to move quite significantly for that to have a big impact on trade. And the dollar was very strong. Like if you think about where the dollar was in March, April this year, it was very, very strong compared to levels we saw back in 2014. So the dollar has a long way to go before it starts to get competitive again, starts to get a real gain on that front. So we've just started the dollar weakening, so to say, over the last 6 months. And typically when you have these cycles, they can run for multiple quarters at least, and sometimes multiple years. So I think it's fair to say that if we have a global environment where the global growth outlook is improving, obviously from a very weak starting point, but improving and improving further, that's really the environment where you have investors in the US getting comfortable with international risk assets, putting capital to work, and sustaining a weak dollar trend.
And at the same time, Jens, there's sort of a lot of conversations out there about inflation, or at least inflation expectations, the idea that those expectations are starting to move maybe a little bit closer into the near term than maybe what it was a few months ago. I am curious that given all the talk about fiscal stimulus, the potential that you could have a new presidential administration and a new reshaped Congress that is willing to expand that fiscal stimulus, that fiscal support. Do you worry at all about the impact of inflation and I guess the timing of it?
So in the short term, I don't really have any major concerns about inflation. We're still in an economy where there's spare capacity, and we can have a lot of growth before we get into those capacity constraints. But I think what is worth thinking about is, are we entering a new political regime? And I think today's news cycle is very interesting, where you have GOP senators pushing aggressively to get an extra $2,000 in stimulus checks emailed to a broad set of the population, right? There is something new going on with the debate about fiscal stimulus. And if that becomes a persistent trend where we can get political support behind backing aggressive fiscal stimulus, then we can enter a new regime where maybe on a multi-year horizon, we need to think differently. And we can already see that in the market to some degree, right? Because there's certainly less concern about deflation than there was break-even inflation is going up towards 2%. And that means the real interest rates in the U.S. are compressing. And that's part of the dollar weakening story too, that real interest rates are actually going down in the U.S. and around the world, they're not moving very much because they had already hit a low level a couple of years ago.
Our thank you as always, Jens Nordvig of Exante Data. And of course, his 2013 book sitting nicely behind him, The Fall of the Euro. That'll maybe be something I'm going to have to read. Thank you as always for joining us. We appreciate it.